I was trying to think of a good title for this video, and I came up with trading with the odds on your side. It's what I refer to as high probability trading, and of course, it's only in my opinion, but what I'm going to show you should make sense to you. If it makes sense to you, it's a strategy that you can employ whenever you see the pattern that I'm going to illustrate in the following. It's June 3rd, a Saturday, and I'm using this opportunity to share with you one of our AT strategies, a pattern that you should be looking for. Now, I want to make it very clear that what we share with you is what we consider to be our highest probability strategies using the Amazing Trader. When in real-time trading, you may find other ways to use this amazing program. Because as it's lined by itself can be quite amazing, as you see here in this sterling dollar chart that we're going to focus on, where we try 1, 2, 3, 4, 5, 6, 7, 8, 9 hours to break this blue line before giving way to the downside. I want to focus it on this area right here. 3 hours where sterling went straight down. I'll show it on a 15-minute chart now. You see it right here, all red candles. This is otherwise referred to as a falling knife. And this offers one of the highest probability strategies, in my opinion, that you can use using the Amazing Trader. What do I mean by that? Well, the tendency when you see a falling knife is for the trader to try to catch a bottom because they can't figure out how to get on and push that knife further to the downside. There's just no way. You just have blind faith. You could sell into it and hope that it keeps going. But when you look at your dashboard and the market pauses, it looks like there's a bottom. We don't see it on a 15-minute chart. We might see it on a shorter-term chart or real-time on a tick-by-tick. So what are we looking to do? We're looking to take advantage of this. Why? Because when you see something like this happening, it tells you there's some kind of real flow in the market. Maybe they're selling sterling versus the dollar. In this case, they were selling sterling versus euro as well. Maybe versus some other currency. Point was the market could not absorb the sterling selling. And as a close associate of mine once said, you got to trade when the market's trading. And how do we know the market's trading? Well, in this case, when you see a falling knife like this, and you don't have any place where you can jump on because you don't know where you place your stop, you cut down, you drill down to the next time frame. In this case, it's a 5-minute chart. And this is, of course, later on, so we're going to just zoom this a little bit. And what do you see here? This is the same falling knife, but unlike the 15-minute chart, which was straight down, you have all these little hiccups along the way. Pause and little hiccup. What do? They form Amazing Trader lines. So when you look at this chart as compared to the 15-minute chart, you say, holy cow. There were opportunities to come in and trade. And how would you do it? Well, our strategy says that when you see ladders building to the downside, and it's telling you there's some kind of real flow and the market cannot absorb, in this case, the sterling selling of the pound, you put on a trade from the short side with a stop above a preceding line, a preceding blue Amazing Trader line that came ahead of a new low. That's all explained in our strategy guide once you get it. But for those who subscribe to the Amazing Trader, the trade is quite obvious, but not easy. Not easy. Why? Because the tendency of traders will be to try to catch the falling knife and not to drive it down. And I'm being very realistic because I have the same, after all these years, that's the same instinctive gut reaction that I have to throw aside. But look at this. you had opportunities anywhere along the way, even down to here, where you could have sold this little blip up with a stop above this blue amazing trader line. If you used our risk management tool and you put your stop simply like this above the amazing trader line, you sold, well, the stop would be above here. You could have grabbed a piece of the action. So my point is that when you see a falling knife or vice versa, market moving straight up on the upside, you don't want to try to catch the falling knife. You want to find a way to join in. And the way you join in is that you scroll down and drill down until you see an amazing trader ladder pattern, which gives you a place to put a stop. When if you look at the next time frame up, there was no place to put a stop. And you avoid the temptation to try to buy a falling knife rather than trying to drive it further. So, very simple. Once again, let's say these lines are not even drawn here. And you got this little hiccup here after you made a new low. In that case, you would have put your stop above here, sold anywhere in here, as long as this line wasn't taken out, this line wasn't formed yet. Or this line wasn't formed yet. Well, this line wasn't taken out, the risk was still in the direction of the falling knife, and you have a trade on. And you're taking advantage of the fact that the market can't absorb the selling of sterling. So that is, in a nutshell, I consider one of the highest probability trades. You see a falling knife or vice versa to the upside. You drill down until you see a ladder pattern. Then you fight your gut reaction to try to catch that falling knife or pick a top if it's moving higher. Use the amazing trader lines as your stop. As long as that line stays intact, the risk is pointed to the downside, and you can grab a piece of the action. So, any chart looks good in hindsight and tradable, but in real-time trading, this is a strategy that you can employ. And if you follow the logic of what I said, it should make sense to you. To reach me, send an email to jay@theamazingtrader.com or visit our website at www.theamazingtrader.com.